Wow, the liquidity crisis in the United Kingdom must be so terrible for what just happened to be happening. Folks, you might remember that over the last few weeks, some crazy stuff has been going on in the United Kingdom. So bad that the Bank of England had to come out and say, hey, we will do an unlimited bailout, buy as many bonds as we need to for the next X days. And when there were 3 days left, the governor, Andrew Bailey of the Bank of England, came out and said, look, pension funds, you've got 3 days left. And that's because so many pension funds were reeling from margin calls and they're dumping their bonds, although they didn't even get as many bonds sold as they wanted to. Only about $19 billion worth of bonds when the Bank of England was expecting to have to buy about $100 billion. The Bank of England's like, all right, well, this is all you got. But to maintain the Bank of England's credibility, at the same time as pension funds were still freaking out, saying, no, we need more time, and the Bank of England's like, sorry, you're out of time, the government of the United Kingdom decided to do something completely different. And it tells you how bad the liquidity crisis must have actually been. So remember, the liquidity crisis in the United Kingdom all started because this new prime minister came in early September, and by mid-September, her and basically her equivalent of the Treasury Secretary came in with a ton of tax cuts and stimulus, which implied that inflation was going to go to the moon, and as a result, bond values plummeted. People are like, screw this, out of here, and they start dumping their bonds, leading the prices of bonds to fall like crazy. Well, the Bank of England steps in to set a floor. That floor goes away on Friday, which implies that potentially today the bottom could fall out, right? If bonds kept falling in value. But what happened before that could happen? Well, this guy, Jeremy Hunt, comes in. Jeremy Hunt is the new Chancellor of the Exchequer. Okay, that's their Treasury Secretary. And boy, oh boy, this should make you realize how close to dirty things must have actually really gotten. Like, this should make you want life insurance, which you can get in as little as 5 minutes by going to metkevin.com/life. You could even Apple Pay or Android Pay for it. Anyway, what Jeremy Hunt did completely destroyed and probably ended Liz Truss's career. It gutted her government. Almost every single one of the prime minister's campaign promises is gone. We went from the biggest tax cuts in 40 years to the largest tax hikes in 70. I kid you not. But guess what happened to the bond market? Well, you have to wait a minute while I go through what they did, and I'll tell you what happened to the bond market, and it's insane because it's brilliant. It's absolutely freaking brilliant. Listen to this. So here's what they did. They said, hey, look, we still want to incentivize the economy, but we went a little bit too far too fast. So instead of going too far too fast in the stimulative direction, let's go in the opposite direction, actually make $32 billion of more revenue. I think it was $36 billion, 32 pounds. But anyway, so they said pretty much everything Liz Truss announced is getting reversed. Energy price caps are being pared back and stayed until April 1. 2, top tier income tax rate is staying at 45% instead of being reduced to 40%. Number 3, corporate tax still going up to 25% in April instead of staying at 19%. Number 4, this is the part where we're going to raise $36 billion, and stability is the most important thing above everything else. Number 5, the income tax plan for any other income brackets is shelved indefinitely. Number 6, the tax cut on alcohol is dropped. Number 7, the 1.25% tax cut on dividends is dropped. Number 8, VAT-free, it's tax-free tourist shopping, dropped. They are keeping some limit to the national insurance increase. That means less spending on their version of Social Security. We just got like an 8.4% COLA increase, cost of living adjustment here in America. But anyway, the cut to the stamp duty for real estate, that's staying. That actually helped some real estate stocks go up like 4% in the United Kingdom today. Seed enterprise investment sticking around. Company share option plan sticking around. $1 million annual investment allowance sticking around. And so what happened as a result of basically Jeremy Hunt coming out and going, yeah, slash everything. Again, going from the biggest tax cuts in 40 years to the largest basically hike since 70. What happened? Bond yields fell 0.5%. 0.5% on a 10-year is a huge movement. Huge movement. And when bond yields fall by that much, that means bonds are rallying. Yup. Look at what they strategically pulled off. They strategically maintained the credibility of the Bank of England, who said, that's it. Friday, we're not buying anymore. We're done buying. They strategically were able to stop buying. And then rather than having the Bank of England potentially risk having to ruin their credibility and actually go buy bonds again, what happened? The government just said, that's it. Scrap all the tax cut plans. Let's raise taxes instead. And all of a sudden, bonds rally. So the market actually pushed bond prices up, which gives pension funds more liquidity. So in other words, in order to create at least the semblance of financial stability, because things obviously got so freaking bad, what did they decide to do? They decided to do whatever they needed to tell the market to make sure that bond values would go up and not fall. And as long as bond values go up, they don't have to worry about the Bank of England coming in, ruining their credibility, and having to stimulate with quantitative easing again. That's what they don't want, because they need the Bank of England to be able to raise rates. But they also don't want the Bank of England to have to raise rates so aggressively to counteract things like tax cuts and stimulus. See, when first tax cuts and stimulus were announced, the very first thing people started clamoring was, oh my gosh, this means the Bank of England's going to have to do a 100 basis point hike in November, if not even more. Basically, markets were like, the Bank of England's going to have to hike so aggressively, they're just going to crush the values of everything because you're going to have to move so quickly. And that was one of the reasons we started seeing so many fears of margin calls, which were actually real. Like, there were tons of margin calls, so many margin calls that firms that were like custody firms that were processing these margin calls didn't even have enough staff to process them all. It was so bad. I mean, you had a United Kingdom basically on the brink of collapse. Bank of England, at the same time we're trying to remove inflation, has to turn on the money printer again to save everything. And then the government is like, okay. U-turn. You stop the stimulus. Let's just raise rates, taxes instead. Let's raise taxes instead. Let's cut the stimulus. Again, going from the largest tax cuts of 40 years to the largest hikes in 70. Crazy. And let's try to get back to financial stability. They have done so. But what it shows me is just how close we got to this sort of financial brinksmanship. We got so close that you literally had, in order to preserve the credibility of the Bank of England, to fire the Chancellor of the Exchequer, the Treasury Secretary, and, but by the way, who's served the second shortest term ever in United Kingdom history, the shortest term in the last 190 years, okay? And you're probably going to see Liz Truss get booted. So in other words, you potentially, for the sake of financial stability, because things got so bad in the United Kingdom, saw a brand new prime minister lose her job and the Treasury Secretary lose their job, all to prevent pension funds from going belly up and the Bank of England from losing the credibility, or the little credibility they had left. That's insane. That just shows you how close we got. Now, all eyeballs are on who's next. And hopefully, knock on wood, nobody's next. Hopefully, stocks just start going up again, bonds start going up again, and we just slowly back away.